Welcome to a special edition episode of This Week in Global Development, which is our weekly podcast discussing the top issues in global development. We are coming to you live from Washington, D.C., just around the corner from the World Bank International Monetary Fund meetings and at our own Devex Impact House event. And I am Adva Saldinger. I'm going to be your host today, and I'm really excited to be joined by my colleagues, Michael Igoe and Elissa Miolene.
Good morning. How's everyone doing?
Good morning.
Wow. All right. Excellent.
Need a little energy in the morning, especially coming towards the end of what is quite a busy week. I think it's probably fitting to start our conversation by just talking a little bit about the vibes. What are you sort of picking up? What's the mood? What are you sort of getting a sense of the sort of atmosphere at the meetings this year?
Yeah, there's a lot going on. I feel like a lot of things have collided this week, right? Like we're in Washington. It's sort of a time when folks seem a little stressed by the shutdown and the broader political context. The bank itself is at this sort of pivot point where it's thinking about its role in a new way with the collapse of official development assistance all around it. So I've found it to be a lot to make sense of. I feel like there's been a sort of spirit of optimism around this big rethink that's happening, but also a sort of level of realism and kind of facing the music that's all just been kind of accentuated by the chaotic, confusing environment in this particular city at this particular moment. So I don't know. I'm not really sure what to make of the vibes, as you put it. How do you guys think the vibes are? The vibes in here are pretty good.
Yeah, it's funny. That was the first question Michael asked Adva and I when he was coming in from his base.
I did my vibe check. I don't live here anymore, so I was wondering what I was getting into.
Yeah, and I think what we said to him on, what was it, Monday or Tuesday was, I think it's okay, but we're not sure. I feel like everything kind of hangs, as Michael was saying, in the balance in DC at the moment. I feel like it's much more muted from UNGA, for example, where it seemed like there was a lot more energy. Obviously, this is also dependent on what rooms you're in, what events you go to. And there was more of a vibrancy, whether it be on the positive, we're working ahead, we're pushing forward, or on the negative, what's going on? We have to do something. This week feels a little bit more like people are wading through uncertainty. I think that came out a little bit too in just conversations with some folks that we were, talking this week at the bank and here at our Devex event, just saying, meetings were canceled. Many people in the U.S. aren't able to work right now because of the government shutdown. So it kind of was a downgrading of whether it be going from, let's say, ministers of X to vice ministers because of the situation here. So I wonder how that's bleeding into the conversations and whether or not that's having an impact on kind of the scale that is able to come out of these conversations this week.
Yeah, and I think I've heard also, I think some people said maybe a little subdued, and I don't know whether that's because of the sort of atmosphere in DC around a period of a shutdown or not very rosy global economic picture, or a number of other things that are happening, and that maybe there are not quite as many people here. I heard that, some places maybe had visa issues, so who's in the room maybe was dictated by who already had a visa and could actually be here. So I think that there's, maybe it's a little bit of a different feel than some past meetings, but, I think with some of these things, a lot of it just feels like, oh yeah, okay, there's still a lot of the same conversations that we're having, and I think, there are some of the same issues that we sort of expect to hear about at the World Bank and IMF meetings that we are still talking about this week, though maybe in somewhat different ways in certain cases. I think maybe why don't we talk about a little bit about what you guys are hearing, what sort of struck you in terms of, I mean, we're talking a little bit about, we're sitting here in DC, so I know yesterday at our Devex event, we heard from Congressman French Hill sort of a little bit about the U.S. position towards these institutions. Michael, I'm wondering what your sort of thoughts were on that conversation and what you make of sort of where the U.S. stands now.
Yeah, it was wonderful to get a U.S. politician who was willing to come and speak in public during a shutdown. So that was a good opportunity to hear from, an influential U.S. representative with direct bearing over sort of conversations related to the World Bank and IMF. I mean, I think what we heard from Representative French Hill yesterday was a pretty nuanced articulation of how the chaos that we've witnessed over the last 8 months, stemming from the Trump administration's imposition of an America First foreign policy and the associated dismantling of USAID and a lot of the rhetoric around, if not withdrawing, then at least drawing a much firmer line in the sand around multilateral organizations and what U.S. engagement is going to look like there. I mean, translating that into re-engagement in some form or fashion, but a re-engagement that really focuses on demonstrable results, getting institutions back to the basics of what they're supposed to be doing in the eyes of, a conservative administration or a conservative member of Congress, and pushing back on, what a lot of Republicans have described as sort of a trend of mission creep by, particularly the IMF and World Bank in their eyes. So in some ways it felt like a description of a return to normalcy after so much abnormalcy that we've witnessed over the last 8 months. But I think, what still remains to be seen is what it looks like when Congress, when people like Representative French Hill come back to work and start to turn some of those arguments into more of a reality. Frankly, so much of the changes that we've witnessed in the global development foreign policy space over the last 9 months have been pretty unilaterally driven by the White House without much firm pushback, at least not public pushback from Congress. So, I think there are sort of two paths. One is that the administration has done what it's going to do in terms of, radical changes to U.S. engagement in global development, and now we're sort of entering a little bit of a new normal or returning to some stability. The other path is that at some point, if the administration keeps pushing ahead with, more cuts, more withdrawals from multilateral organizations, which I don't think we've got a strong indication that that's going to happen. But, somewhere down the road, there's a reckoning. We've talked about this before. Like something comes to a head between the White House and Congress, and certainly Representative Hill didn't give us any reason to think that that's happening. I think his was a pretty measured, articulation of what America First foreign policy looks like and what it means for global development. But there's still a lot of unanswered questions, I think, about how that plays out over the next few months.
And one of the things that I think is interesting is that I think what we didn't see, for example, at the spring meetings is sort of more public sort of tension between the demands of the U.S., which is obviously the largest shareholder, and this sort of, where we heard Besant articulate, we think these institutions are important, but we want them to avoid this mission creep. And by mission creep, they're largely talking about a focus on climate and gender and other issues like that. But one of the things we're seeing, and we've seen last week, sort of more publicly, is significant pushback, particularly by European Union shareholders on this issue of climate, because they want the World Bank to keep investing in climate and keep it as a priority. Because what we saw actually over the last few years, in the previous administration, a lot of the reforms were pushing the bank to really integrate climate and development as sort of twin goals. And I think that there is a significant push from a large group of shareholders to keep that as a priority of the bank. And we've heard Ajay Banga, the World Bank president, talk a little bit about that. But I think we're starting to see some of that more public tension, and certainly puts the bank, I think, in a tricky position to sort of manage the different interests.
I think you're right, but I think it also depends what you mean by climate change. Not what you mean by climate change, but what you mean by the World Bank doing something about climate change, right? Like, is addressing energy access, climate change, action. And if so, like, that's not a black and white proposition. Like, I moderated a panel yesterday on energy access and renewable energy transition. And, there are a lot of development-oriented people who don't want to see technological options, energy options severely limited for the world's poorest people, right? And like, in a lot of ways, that argument resonates with some of the things that you heard from French Hill yesterday up on the stage too, which is like, it's not about imposing choices. It's about, the phrase that he used that really stuck with me. Like, he was like, a lot of people talk about sustainable development. What about actual development? And I think that's pretty glib, and probably sustainable development is a concept worth holding on to. But I do think that there's sort of a space for that conversation to exist, where the bank doesn't have to give up any sort of commitment or consciousness about the risks of climate change in order to continue doing work.
I do think you've kind of seen that all year, though, right? It's not just the development sector. It's also companies and the private sector who are kind of coding their climate work in different phrases, right? So one kind of example that I see of that, again, it's climate is big and it's related to many, many different things. But on Tuesday, the bank kind of unveiled this big initiative called AgriConnect, which is about agribusiness and really kind of funneling support across the bank's various different arms and avenues and partner organizations that are also international financial institutions or multilateral development banks to really inject support to agribusiness. Now, what do farmers deal with? In many cases, that's climate change, right? So you had yesterday we had a panel with several folks we were talking about this, including someone from the Somalian Prime Minister's office, just talking about, okay, what does that look like? What is agribusiness? What is food security? What does food security preparedness look like in Somalia? Well, droughts are a thing. Conflict is a thing, crisis is a thing, and this is all kind of blended and interconnected. So I think you're looking at, okay, how do we phrase different programs to make them work in this environment in a way that doesn't completely give up our climate ambitions or perhaps what European partners want, but perhaps do it or talk about it in a slightly different way.
I think a lot of what is happening exactly along the lines of what you're saying is like, there's a way to talk about things that scores political points, and there's a way to not talk about them as much that allows you to carry on with what you
Which I think
need
is
to be
exactly
doing.
what the World Bank is trying to do, right? And what we heard from Axel yesterday was that, they're hitting the climate targets, but they talk about them not as like, this is a climate project. It's like, this project had climate co-benefits is the new, I think, turn of phrase that is.
Everybody wins.
Right. But I think, the bank has made policy changes that the U.S. pushed for, and actually French Hill has really wanted for years around, taking away its ban on nuclear energy. And I think what you said really rings true, because there are a lot of African leaders who have been saying, we want an all-of-the-above energy strategy. If we have natural gas that can provide solid baseload energy, we need that to be able to develop, right? So this isn't a new debate or conversation. I think a lot of people talk about it as balance. And I think that sort of fossil fuel conversation is maybe a next point of contention at the World Bank. Do they sort of change their policy on that? And so that's certainly something we'll be watching.
Yeah, that feels like time is a flat circle, because I feel like that fight, I remember that fight happening, over and over again 10 years ago and since then as well. So I agree. I mean, I think that's going to be the battle, and it's a push and pull, right? I guess that's what I'm saying is like, it's, I feel like what leaders in this space right now are trying to avoid is a sort of binary where they're either this or they're that. And, it's a tough balancing act to pull off in this environment.
I think in that spirit of everything new, old is new again, we're seeing a new sort of reorganization effort at the World Bank, and this sort of effort to become one World Bank group. Not the first time we've sort of heard that. I know you've covered previous iterations of some of these transitions, but
World Bank staff love reorganizations too.
Yeah, I think we're hearing a little bit of that this week, because last week Adva announced in an email to staff that they were going to merge a lot of the operations of the bank, everything from sort of the knowledge operations to create a more robust knowledge bank, and to treasury functions, to HR and IT and legal departments and all of that. So I think there's a lot of change afoot. And I think a lot of the things that they're talking about this week are really about integration of the bank and sort of towards that vision of being more efficient by operating across lines. And I think there are some interesting sort of examples of how the bank is doing this. One I would point to is, like, about a year and a half ago, they merged all of their guarantee instruments. It used to be that IBRD, IDA, IFC, MIGA, which is the guarantee arm, they had separate guarantee instruments. If you wanted to get a guarantee, you had to go to figure out which one to go to. So they brought those all together, and they've actually been doing some interesting sort of experiments where, because they're now all under one roof, it's allowing them to actually leverage two guarantees, one on top of each other, or really push change, for example, in the way IBRD writes its loans to allow for 5 years down the line, once the initial risk is sort of gone, those loans to be converted to sort of commercial loans that are backed by a World Bank guarantee. And so I think that is sort of probably the direction that Ajay Banga wants the bank to go, right? Really looking at how do you use the different tools of the bank to sort of reach the objectives around, well, we've heard a lot of talk this week about private capital mobilization, but also sort of the North Star of the bank, so to speak, these days on jobs. And I know, Elissa, you have, talked to some folks on jobs this week, and sort of curious what you're hearing on that, because I think it's not always so clear. I was at a panel earlier this week that was about private sector mobilization for jobs, and no one in the entire panel actually said the word jobs. So I think there is maybe a slight disconnect sometimes between sort of the guiding principle and how some of these other objectives actually get you there. But curious what you're hearing.
Yeah, I mean, it's a really important point. I think jobs has been a headline in a lot of the conversations that the bank has kind of set at the top level. But the more that you go to the events, and we're kind of like, okay, but are we talking about jobs now? That being said, we did have a really interesting conversation here yesterday about kind of jobs and its link with migration and mobility. We had Lant Pritchard, who is he's from Labor Mobility Partnerships, and Kamal Asaheb, who is works with the Governor of Maryland's office, Westmore. And we were just talking a little bit about, like, okay, linking this idea of jobs and what we need, and knowing that, in countries across the world, there's going to be an explosion of young people, and there already is. And in other countries, there's, because of fertility rates declining and a number of other issues, there's a lack of jobs, right? How to kind of square this really obvious. And the answer was migration. Now, to say that in DC in 2025 is like kind of insane, right? And we were just kind of a little bit talking about that. You mean like immigrants come take the jobs? Like, that's not quite the vibe, going back to that initial conversation that DC is having at the moment. But it was a really interesting conversation to just kind of start digging away at, like, okay, can we look and reframe this in a different way? Again, goes back to conversations about how things are framed and if you talk about them or not at all. But the panelists that we had yesterday were really kind of pushing forward this different idea that, with numbers, I think Lant is an economist, so he was kind of bringing that lens of the ways in which these gaps could be filled. Now, whether we're hearing that here at the Devex Impact House versus whether Ajay Banga is saying that is a different story, right? But it's something interesting to consider, and these kinds of ideas that are being floated as the way in which we can look at jobs and job creation and gap filling in perhaps different avenues than we have before.
That it's not only you have to solve the sort of local market problem,
Exactly.
but if you look at the solution from a more global lens, which I think is interesting. Because I think a lot of what we're hearing is we need to create local jobs, which I think it's a yes and situation, right? But that's a really interesting perspective.
Yeah, the thing I'm sort of puzzling through is the extent to which the jobs mission or agenda that Ajay Banga has championed and repeated multiple times, the extent to which that's sort of like this, quote unquote North Star that justifies the pursuit of a lot of other things, or whether it's really the kind of concrete, measurable metric that the World Bank is now organizing itself around. And I think there's a big difference there. And I think that's where you mentioned private sector mobilization. We should probably go there. But I think what a lot of the concerns that I've heard are that as these institutions recognizing that ODA has suddenly collapsed, lean into private sector mobilization as the place to be. You start seeing big numbers announced around capital mobilized without seeing big numbers announced of the actual jobs created in the bank, in the places where the bank is working?
And I think there are real questions about that. I think to your point on jobs, the World Bank released a new scorecard for how it's measuring its impact and progress. And the one metric that's still missing is actually jobs. They're still working on the methodology. And so I think that's sort of an interesting place to be when we don't have a baseline. And so it's going to be really hard to measure how the bank is sort of delivering on that goal without having that. I know they're working on it. Maybe we'll see it by the end of the year. I don't know. But I think on this private sector, private capital mobilization piece, I think you're really right. And I think the question is what is the underlying purpose of this mobilization, right? And if the idea is that, because I think that big picture, people are we have to bring private capital in to solve these problems. There's not enough public money, certainly not today. Okay. But how do
or not enough willingness to put it forward.
Yes. Right. Not the political will to spend the public monies. But I think with the private capital, there's a question of then also how do you structure? What is the type of capital you're going after? In what contexts? Because I think there is a fundamental question. If your primary goal is private capital mobilization, you can mobilize a lot more capital in middle-income countries than you can in low-income countries and fragile states. The private sector, in many cases, unless there's really significant de-risking, and even in those cases, is going to be really hesitant to go into those markets. Maybe there's an argument to be made for local, certainly building local capital markets to help fill some of those gaps. But I think it's a tricky situation. I think you have to have sort of a balance. And it could be that the bank says for middle income countries, we're going to set X targets on private capital mobilization with the intent of these outcomes. But I think we don't quite have the sort of sight lines into what some of those end goals are. And I think it's an important conversation that I've certainly heard some people having, on the margins, because, the big picture is a celebration of IFC issuing its first securitization, which is a big deal. And it could bring new institutional investors into these transactions, into these markets, free up space on IFC's balance sheets to make additional investments. I think a lot of people agree that's good. The question is, what does IFC do with this new lending? Does it have the capability to do more lending? What is its risk appetite? So I think we're sort of in an interesting period of time where the conversation on private capital mobilization is sort of a big part of what everyone's talking about. And there is some more, I think one of the things I talked about with folks at the Devex event yesterday, there's a bit more practicality in the discussion than there used to be, sort of a realism about where private capital can fit in and needing to design the sort of instruments that private capital understands. But I think there are still questions.
Yeah, practicality or necessity, right? Like it's just the alternatives have sort of dried up. And so I feel like this conversation that used to be about, we have development assistance, how do we mobilize the private sector to fill, the remaining gap, has really turned into a conversation that's like, we don't have development assistance. So like, how do we solve this problem immediately?
I do think there could be a pretty interesting kind of merge of the worlds here when you look smaller. I think something that I've increasingly been hearing about both here in DC and just over the past couple months is nonprofits, aid agencies looking to inject private capital mobilization in different ways. For example, obviously we all know about microfinance and the ways in which that can work, but also microinsurance, different ways in which organizations are looking at impact investing in their own, whether it be particular agency arms or spinning out another arm to then kind of get funds in. I think this conversation, at least this week and in weeks prior, has just, at least in my circles, have become a little louder. Like, okay, we really, really need to either ramp up existing efforts or think through new ways to bring the private sector in, perhaps in not as large scale as we're talking about at the bank or other IFI levels, but maybe smaller, right? What can organizations do?
Yeah, and I think a piece of this is how do you figure out what to do with the limited official development assistance that exists, right? And where do you leverage? Unfortunately, I think we're out of time. I know the three of us chat a lot about these issues and could probably
This
go
is
on
way more
forever.
fun than doing it through a screen, though. So
Yeah, it's very fun
Yeah.
for us to get to do this in person. So, Michael and Elissa, thank you so much for being with us, and thank all of you for joining us in the audience today as well.
thanks.
Thank you.